We are live, I think. All right, ladies and gentlemen. Now today, the company that we are talking about is NUBank. But first, we need to jump over here because SoFi is $26 and so for those of you who are here early, today we are going to talk about NUBank. But first, I just want to show you what I'm doing with my SoFi position. I think I haven't fully explained the purpose of this portfolio over here, but I think apart from generating income for myself using the wheel strategy, I actually use this to supplement my parents' retirement income. So I try to give them around $5,000 or so every single month. Now, the thing is, because we're going into 2026, where it is a midterms year, and I'm actually not very sure how the market will perform, whether or not there's going to be volatility and things like that. And I don't want their retirement payment to be affected. And so because of that, today I actually sold 1,000 SoFi shares. And then I wrote the rest of my contracts up and out. So let me show you what this means. If you take a look, I'm a little bit not used to this. So basically, right now, what you can see, I don't think I can zoom in on this, can I? I'm so sorry. I don't think I can zoom in on this. But if you see the SoFi position over here, initially, I had 60 covered calls expiring this Friday, 29th of August. And those covered calls were at a $26 strike, which is exactly where we are. So basically, what I did was I wrote those calls out until 19th of September. Why 19th of September is because I'm actually going on holiday before that. So I want to be able to close out the position before I fly off for holiday. And then this netted me around slightly over $3,000, maybe $3,700. But you got to bear in mind that I paid that back earlier on when I closed my option as well. And I actually sold 1,000 shares of SoFi. So now I only have 11,000 SoFi shares over here. But of course, I'm actually looking to, basically what I hope to do is that you can see this UNH position over here. I actually bought 10 contracts of UNH at $20.50, and they're now this has doubled, more or less doubled to $39.80. Now I believe some of you who have followed me in this process last week, you would have realized. Oh, I just realized something. I think I did not set the comments. Give me a minute. This always happens when I set up the stream through StreamYard. Yep, everything. All right, I think right now people should be able to speak in the chat. Yep. Hopefully now you can speak in the chat, but basically I think what you're seeing over here, I think I was mentioning earlier on, part of the reason for this portfolio is I try to generate 2 to 3% returns every single month using the wheel strategy. And then basically I gave around $5,000 to my parents to supplement whatever retirement income that they are living on their dividends and stuff like that. So basically I was explaining that I had 60 covered calls expiring this Friday at $26 for SoFi. So in the end, what I decided to do was, rather than wait until Friday, and of course SoFi could be higher on Friday, but at the same time SoFi could also be lower. All I know is that in my mind, I already plan to sell off 1,000 shares of SoFi at $26. The reason for that is that because I think over the last 2 to 3 weeks, I've been actually realizing some profits so that I can put it into basically a fixed income fund. And then this basically will be paying out my parents $5,000 every month going into for the rest of 2026. So I basically settled their entire retirement income for the whole of next year without having to worry about any market volatility, because going into 2026, right, with some of the news that we have received about the economy, with next year being the midterms year where there usually is a little bit more volatility, personally for me, I'm able to take that volatility. I'm able to live off lesser income for a particular month. But in terms of my parents' retirement income, I do not want that to have any fluctuations over the next, let's call it 12 to 18 months. And so that is why I've actually taken out over $60,000 from the account. I think I have actually documented that on my X account, but including this 25,000, I would have taken out around $60,000 from the account, and this basically covers my parents' retirement income for the next 12 to 18 months. And basically, I only have to now focus on using this portfolio to generate income for myself. Now, before we get into NUBank, let me show you. I think I have showed some of you before the file that I used to track my wheel strategy. I think I got this. I've mentioned this before, that I actually got this inspiration from watching TJ. I don't understand. I mean, when I watch TJ do his wheeling, I know he has this Google sheet that he used to track. But I think sometimes when you are not the one that built out the model, it's actually quite hard to follow why certain numbers are at a certain place. So therefore, I decided to build my own model from there. Let me share this screen with you and update this at the same time. So you can see over here, basically my model is slightly different. Maybe I should put myself smaller in the corner so that I can share a bigger screen. Okay. Not too sure how this is. I think this is okay. So you can see over here, in terms of rolling options, for the longest time, SoFi has actually been one of my most profitable options roll. But in recent times, because of how fast the stock price has actually gone up, the rolling hasn't gone that well. So for example, I started tracking this from the day I opened this new portfolio. I didn't track this using my previous portfolio. So you can see on 13th of June, we sold 20 puts, 1 week expiry, 22 cents, closed it for a profit, and it was profitable all the way until here, where I had to close for 5,000. Oh, you can't even see it because of my face. I had to close it for $5,820 loss. This was basically what was it? I believe those were covered calls. Yeah, I think I've got screwed by my covered calls on SoFi so many times. And so today, what just happened is that I closed my 2 puts. One is at 2 cents. And the reason why I closed my puts at these levels is not because that, I technically I could wait until expiry, but there's no point for me waiting until expiry just for the extra 2 cents over there. At the end, I think what makes more sense is for me to free up that collateral so that I can sell more cash secured puts, which I will be doing after the stream. Yeah, so basically I have trimmed So basically, what did I do? Okay, so I closed this and I closed this at an average price. I sold it twice. I believe I sold it twice. Let me see my orders. You can see over here. SoFi, 29 August, yeah, 79 cents, 82 cents. So I think let's call it an average of around 81 cents. So again, for cash secured puts, usually you're not, I mean, usually for me at least, I am not too fast when I am closing it at a loss, because it usually means that my portfolio is extremely green, like in this case. So cash secured put 29. Yep. And I'm closing it at, so I closed it today, which is 25th of August, 32 days, and I closed it at around average of 81 cents. So again, if you take a look, I just closed my $20 cash secured covered calls. Sorry, I closed my $20 covered calls at a $5,000 loss. Rolled it out to $26, thinking that I'll be fine. Rolled it out again. Now rolling it for another loss again. So what I have done with this 6,000 shares, you can see, is that I have sold another covered call, 50 covered calls for 75 cents. Right. So basically, this is going to be over here. You can see, what is it? Today is 25th of August. Basically, I sold a covered call, and this will expire 19th of September. This is going to be at $29, 50 covered calls, and at, sorry, I forgot, 75 cents. Okay, so this is open, and then currently it is at, I think, around 76 cents. So what I have done is that I have built in my own intrinsic and extrinsic value calculator over here. And you can see it basically warns you when your extrinsic value is too low, and then that's when you have chance of early assignment. So I basically, I basically built a rule over here. If you can see at the top, if I have less than around 90% of the less than 10% of extrinsic value, basically it will be flashing red. So for example, let's say this is a $20 call, a covered call, and then you can see because the extrinsic value will be $6.35, and because of that, this will be flashing red over here. So this basically helps me to keep track of my covered calls, because in the past I have allowed things to be called away just by not paying attention to them, right? So I've inbuilt this into my own system, and then so this 19th of September, I'm just assuming I let it expire, nearly worthless. I usually never assume that I let it expire worthless, for the very simple fact that sometimes I may close it earlier, so I just want to have an idea of what that return will look like. So let's see, 3% yield. Okay, over the next 25 days, I think that's not too bad. So if SoFi stops, I mean, yeah, if SoFi stops at $29, $30 in 25 days, can it get there? I mean, I think there's a very high chance that they can get to $29, $30. And honestly, at that point in time, I think what I might do is just allow the shares to get called away at $29. Anyway, it's only just 5,000 shares, and then I'll just sell a put at the exact same price. Yeah, but right now, today, the reason why I'm selling the shares, like I said, is because I want to secure a fixed income for my parents next year. So otherwise, I wouldn't have sold the shares. So you can see things like HIMS are actually doing much better from an options perspective, right? So we have two open position on HIMS. Now you can see over here. Okay, I think this is a very good example. If you look at this last row over here, I've sold on 6th of August, I've sold 10 cash secured puts on HIMS at $45. Now, HIMS today is around $44.68. So because of that, they actually calculate basically it calculates the intrinsic and extrinsic value for me. Tells me that the extrinsic value currently is around 59%. That's still fine, and yeah, although it is below my, I think the numbers are slightly off here. Oh, it's $43.66. That's why it's $1, and yeah. So although it is underwater, but because there's still enough extrinsic value, there's a less likelihood for the covered calls to be called away, right? So I'm still not worried yet. So sorry about that. I swiped left on my trackpad. $17 covered calls will really be giving me sleepless nights as well. So that's why I tend to roll it before break even, or at break even, so that I don't end up with sleepless nights. And yes, NUBank is an amazing company. I think when I was later on, you're going to see, but when I was going through this whole assessment with NUBank while preparing for this, I think I realized that I still do need to tweak my framework a little bit. I've made a list of possible changes to make to the framework. So at the end of these 10 days, I'll spend maybe 2 or 3 days reworking the framework, and then I'll come on another live stream and basically speed run through these 10 companies again using the edited framework and see what we end up with. Yeah, so basically, like I said, okay, I really need to stop doing that. I keep forgetting that I'm looking at my screen through StreamYard and not my actual Excel screen. So give me a minute. Yeah, I think that oh, I just want to show you one more thing about my covered calls. Give me a second. So I think some of you, especially if you come from like Amit's channel, Tanner, Tavis, and things like that, you would have heard them talk about their option strategies. And so how this tracker slightly differs is because I also track the intrinsic and extrinsic value. Plus, I also track the transactions of shares. So, for example, I have just sold 1,000 SoFi shares, and I've sold it at an average price of $26.05. Right. So, if you're wondering why my price average for SoFi is $15.21, it's because in my previous brokerage, when it was $7, $8, I moved it over here. I couldn't move the shares over for some reason. The ACATS transfer wasn't available to me. So I had to sell my position and then rebuy it over here. So I think during the time when I sold the position and bought it back, I actually lost about $1.50 in terms of value because I sold it in the $12, $13 range and had to buy back in the $15 range. Right, so around $1.50 in value was lost, but anyway, it doesn't really matter because $15, you can see based on that. If I use my original cost basis, which some of you know is around $7.80, then you can see the profit and loss is a lot more. But I'm just using 15.20 to make it easier for me to track this particular portfolio. So you can see once I sell 1,000 shares, what you notice is that on top, this is the initial position, and I'll update this every year. So in 2026. Whatever I start the year with, I'll do it over here. So this is basically tracking my transaction throughout the year. So currently, after selling 1,000 shares, I have 11,000 shares left with a total value of $288,000. And out of these $288,000, $130,000 is being collateralized with under a covered call now. Now, what I have done is that when I sell shares, part of it, in a sense, goes to the recovered capital, and then the other part of it basically is the realized profit, right? And then I have the unrealized premium and realized premium. So you can see if I net out everything, you end up with an adjusted cost basis of around $14.39. Yeah, so I think with that, that brings the talking about options part of the segment to an end, and then we can start our deep dive into NUBank, right? Let me know if you all want me to cover more about options, because honestly, I don't claim to be any sort of expert in options. I do very, very simple, standard stuff, right? I buy leaps and I do the wheel strategy, which is basically everything, that I think most of us that have followed some of the other channels, you guys would have known as well. I might have my own slightly different way doing it and of looking at companies, but in general, the premise is the same, right? You sell covered calls, you sell puts, and then you basically collect the premium, or you, in this case, like SoFi, you win because you have capital appreciation. So that's about it. All right, NUBank. Can I just ask how many of you in the chat actually own NUBank? Okay, so today we're going to cover a couple of things. I know a couple of you here own NUBank because I see Mr. Aston saying that he regretted not getting in at $8, and thankfully you're in now. Personally, for me, I am trying to run a very tight portfolio. So because of that, right now, I only have, you can see, 5 positions: SoFi, Grab, Oscar, UNH, and HIMS. NUBank used to be part of this position, but like I said, because the main strategy I use is that I actually use this portfolio to generate income, and the premiums on NUBank aren't that fantastic. So because of that, eventually I decided to focus on some of the companies, and I already have Grab, which is another company that isn't fantastic in terms of option pricing and things like that. So because of that, I made the difficult decision to get out of it, but I still really like the company, and I'm actually thinking of adding it into my other buy and hold portfolio. So basically, I run 2 portfolios. One is a buy and hold approach. I don't really look or touch that portfolio often. And then one, which is this portfolio that you're seeing over here, is the one that I use to generate income. Just break. Oh, okay. So I okay. Jonathan owns NUBank. Frank also owns. Okay, so Frank is breaking even on it. Yeah, I mean, I guess if you had, yeah, I think breaking even now is not too bad. But I guess you had the chance to like average down over the last couple of years. But I understand that sometimes we cannot average down. I think those of you who were with me from the start, you saw there was this period of time when SoFi was in the $4 range that I got assigned SoFi shares at $15 because of the option strategy. And because of that, I didn't buy as much as I wanted to in the $4 range. So you see, I've made tons of mistakes on options, which is why I came up with my own tracker and things like that. And I think, yeah, and I think that's how we learn in the market. I mean, you can't always win. You can't always win. So yeah. Yeah, so I totally get that if you don't even have the if you don't have the capital to continue to average down. Okay, so today we are talking about NUBank, and basically I think NUBank is not a company that is unfamiliar to us. I think most of us should be fairly familiar with NUBank. So welcome back. Today is officially day 5 of covering 10 companies in 10 days, and we are basically at the halfway mark, right? And so I thought, this is actually quite apt that today with SoFi, we started off talking about SoFi's options and how SoFi has just hit $26 a share. This is actually a fintech that people like to compare against SoFi and use it as somewhat of a benchmark of what SoFi can eventually become. So now, for the skeptics, some of them would look at NUBank and say that, why buy SoFi when you can buy a company like NUBank? And I think for people who are extremely bullish, they say that, look, this is what SoFi can become eventually. Now, I think the truth is somewhere in between. Both businesses do have their structural advantages and disadvantages due to the way that they run their business, due to their geographies, and basically the focus of both of these businesses. So I really do want to start us off by listening to this clip from the NUBank podcast. So for those of you who are unaware, NUBank actually has a podcast. And then can't find it. I wait. I think I saved it on X because I saw one of the X accounts that I follow actually posted a clip of that as well. Give me a second. Okay, I think I've saved it. Okay, I'm not. Let me know if you can hear this. Yeah, let me know if you can hear this.
Technology companies in the world created over the past 20, 30 years. A lot of them, big majority of them have come out of the US. They have not come out of the global south, they have come out of the US. And why is that? It's because they have been trying to solve problems that are global in nature.
Are you able to hear?
Obviously, the US has a lot of the capabilities and technology and talent to be able to reinvent, to take people to Mars or reinvent the rockets. But the leading technology company in financial services is unlikely to come out of the US because the initial problem wasn't apparent necessarily there. So that was not necessarily the problem that the entrepreneur wanted to solve. But when you go to Brazil, the pain there was 10x bigger. And so in countries like Brazil, if you have a conjunction of factors from a consumer pain that is big, but also a regulator that enables that innovation, and you have capital and you have entrepreneurship and you have access to data, if those stars align, then you might actually build one of the leading technology companies in that space. And that's why NUBank today globally is one of the leading digital banks in the Western world that came out of the global south. So I think it depends on the industry and the consumer pains. It is possible that the future leading healthcare company in the world might come out of the global south because the pain felt in the global south on healthcare is gigantic, is much larger than in a lot of developed economies. And what AI has done is democratizing access to that knowledge, right? Expertise becomes a little bit of democratized. So,
right. So if you listen to what he say, I think he gave a very interesting perspective. I think he feels that, the possibility is that the leading financial services company on a global scale is unlikely to come out from the US. And I think the overall thesis behind this statement is that he feels that the pain point for financial services in the global south, in South America, is much bigger than in the US. Now, we know in the US, Robinhood is definitely gunning for that same title of being, the leading global financial services company. But I think apart from that, I think his whole perspective over here is that because we are solving a bigger problem in terms of the pain points that are being felt by people in South America, people that are being felt in Asia, in Africa, and wherever else they're planning to expand into. And so what he really mentions here is he's really talking about the fundamentals of the business, right? Which is to solve problems. That is what business do essentially. They solve problems. And it is a matter of fact that, for people living in the US and other developed countries, I would think Singapore is included, that although legacy financial institutions are a pain in the ass, the fact of the matter is that even if there's no Robinhood, even if there is no SoFi, these legacy financial institutions, they work. They are annoying, they are a pain in the ass, but the pain point of having a bad financial of having a legacy financial institution isn't as bad as totally being an unbanked population. So because of that, I think what he's saying, and I'm inferring from what he's saying, is that because the focus of the top engineers and top tech executives in all of these developed nations, like the US, are going towards solving the quote-unquote bigger problems, right? Things like AI, things like launching rockets into space and things like that. And because of that, that is where the focus and that is where the biggest breakthroughs from these developed economies is going to come from. But in terms of financial services, and he actually also mentions healthcare, the companies that are tackling these problems, that are solving the biggest pain points for the most amount of people, come a lot of these underdeveloped nations. And he mentions that it is actually AI that is democratizing this knowledge, that is enabling them to solve these problems at a rate that is perhaps faster than some of these other developed economies. Oh, yes. Correct. So on YouTube, there's many podcasts with the CEO and all that. So I'll be linking this exact podcast. I'll really link this exact podcast down in the description below after I post the entire live stream. Right. Okay. So, where was I? Live stream. Right. So I think the example that I think of is that when we talk about Robinhood, Robinhood is exciting. They're really at the cutting edge of finance. They have launched their Robinhood Legends. They're bringing tokenization into their platform, and they're trying to push for this move towards tokenization in the financial ecosystem. And they're really, like I said, at the cutting edge of financial services. But to David's point, these are not things that solve the problem for the entire population. Like I think majority of us here might understand tokenization, might use Robinhood Legends and things like that. But for the large majority of the population, at least I'm speaking from my experience in Singapore, I think even though we are a developed nation, not many people understand how to invest, what is investing. A lot of them still see it as gambling. So while Robinhood is at the cutting edge, they are not solving the biggest pain point, and that is his basic argument of why a leading global financial company could possibly come out from the global south, Latin America, right? So, and I think this is a philosophical argument to be had. You know, what does it mean to be a leading global financial services company? And to be honest, you know, I think business is an infinite game, right? There's basically no ending point. There's no, oh, I have won, right? You play the game just to play the game. And, you know, it's very hard to decide what do you mean by the leading global financial services company, because a financial services company like Robinhood might not serve as many customers as a NUBank, but because the customers that they serve have, you know, a larger access to spend, so because of that, the assets under management for a company like Robinhood might be a lot bigger than a company like NUBank. Right. On the other hand, you might not serve people with as much assets under management, but because you have more people on your platform, that some people may perceive that as being the leading financial services institute. And so this is a philosophical debate that there's no answer to. And at the end of the day, I don't think that there is an ending point. And I don't think that is David's point when he's talking about this, but I think he's just talking about the fact that one of the leading financial services companies should be coming out from Latin America, and he's positioning NUBank to be that company. So you can really see that okay, going back to the slides, you can really see that, you know, NUBank is really one of the companies that are really positioning themselves in a way to be that financial services, so the leading global financial services company. And NUBank was basically founded by David Velez back in 2013, I believe. And yeah, so the reason why he started NUBank in the first place is because he actually shared this story before on some podcast where he was saying, it could be on the same NUBank podcast that, you know, that they actually post fairly frequently, but he was actually sharing how, you know, he had this experience where he had to wait very long in line to basically apply for a bank account to be open, and then after that there were fees and things like that. So it was a very unpleasant experience, and so because of that, this was really a pain point that he felt strongly about, and that is why he wants to solve the problem for Brazilians today, and then to expand it out now to countries like Mexico and Colombia as well. Right, so you can see today they have over 114 million members in Mexico, in Colombia, and in Brazil. And they actually have this entire flywheel. If you think about SoFi's business model with their flywheel, I think NUBank's flywheel is way more impressive. And I think you can see, I just want to point out that you can see the dark purple portion. There's new travel, new shopping, and I think, was this? Or new sell, right? This is their mobile plan. And so they go beyond just financial services. They really get people into their flywheel. And I think you can see a pro and cons of that. You can see it works for their business model because they're trying to reach the most people possible. But at the same time, because of this large diversification of their business, you can actually see their margins are perhaps not as high compared to some other companies later on. So NUBank has basically categorized their business into 5 financial segments. And the first one being credit and debit cards, which is how they started the business to begin with. And I think it goes beyond that. It's about creating an entire payment ecosystem and entire payment solutions. And they include things like the QR code-based payments, as well as PIX instant payment solutions, which was launched by the Central Bank of Brazil back in 2020. So they work with the government to basically power that, and it enables free real-time transfers 24/7. So basically NUBank has integrated this into part of their ecosystem, and right now over 80% of the Brazilian population actually use PIX as a payment method. And so therefore this is how NUBank has actually used all of these different innovative ways to actually reach out to a larger audience. So additionally, on top of all of these instant payment solutions, I mean, they do also offer the typical wire transfers. And I think in general, if you look at all of their solutions across all of the different segments of their business, they're just aiming to simplify a certain pain point for the customers. And in this case, it is point to money transfers. So on top of all of this, of course, they have their basic saving accounts, business accounts, as well as their investment platforms. And then like other banks, they also offer both secured and unsecured loans with limits that grow over time so that, the users are able to build their credit history with NUBank. And I think this just makes them an even stickier product because you think about someone who perhaps apply for their first loan with NUBank, and then you build up your credit score with that. And because of that, and because NUBank already has the data of how you have actually made payments in your previous loans, they actually have the data on your financial behavior, your income, your spending habits, and things like that. Because of this, they are likely going to be able to give you a better loan, a bigger loan, compared to some other banks who basically have no prior relationship with you. So because of this makes their entire product very sticky. And I think that I think this really shows how they have managed to achieve such a high level of penetration within the Brazilian market. I believe over 60% of the Brazilian adult population is using NUBank as their day-to-day bank, and I think they have found a model that really works in Brazil because of and whether they have found a model that really works in these Latin American countries, in Brazil, in Mexico, in Colombia. And I think the challenge is whether or not they can take this model and basically implement it in somewhere in a more developed nation like the US and in Europe and things like that, and whether or not they still actually see the same kind of cost advantages that they're seeing in Brazil and in Mexico and Colombia. So I think they might, if they bring their business overseas, might have to tweak certain things to adapt to a particular demographic. But I think by and large, you can see that this is a business model that really works. Now, on top of all of this, at the end, they also provide protection through things like life insurance, home insurance, and I think they do insurance for mobile devices as well. So I think NUBank has, very explicitly laid out how is it that they managed to grow their business so fast. This is actually taken from their 10K, and they have an extremely low customer acquisition cost. I don't know if you can actually see this because this is so small. Let me see if I can make it bigger somehow. Is it bigger? No, this just made it smaller. Yeah, I think, sorry, I'm so sorry. This just made it smaller, but basically I'm going to read it out for you over here, okay? It says we have an especially low customer acquisition cost, okay? Our average customer acquisition cost is $7 per customer. Now, if you have remembered in my previous SoFi video, I said SoFi is doing fantastic compared to other banks because their customer acquisition cost is between $280 to $320, $280 to $320. So which means for every 40 customers that NUBank actually advertise to, for every 40 customers that NUBank acquires, SoFi acquires one customer, right? So that is basically the difference. And this is where I say that if they actually bring this model over to other developed nations, because I think there were certain rumors of them possibly going into the US, whether or not they can still put up these kind of unit economics is really still remains to be seen. And I think this is something that they may need to tweak their business model and adjust along the way if they plan to move into all these more developed demographics. So I think at the end of the day, you can actually see that, it is this low cost structure is really built into the entire business model. And a large reason behind this is because of how good their products are. You can see this second line that I highlighted in yellow over here. Like I said, it's very small. Let me read it out for you. It says that we believe our organic customer acquisition model is among the best in class model, as evidenced by the fact that we have acquired approximately 80% of our customers organically on average per year since inception. So that means since 2013, every single year, the total number of customers that come onto their platform, 80% of these customers basically found out about them through organic word of mouth marketing, which really speaks to how differentiated and how good their products are compared to some of the legacy offerings in Latin America. Now, however, despite all of these things that are working for NUBank, we need to talk about why NUBank has actually stayed stagnant pretty much for the entire year. You can see over here, they basically stayed stagnant in between there were certain times where they fell below this red line, but they pretty much stayed stagnant from January all the way until today, between $12.20 and probably $13.94. So for those of you thinking that today, when NUBank is trading in the $14 range, you perhaps might have missed something. I don't think you have missed anything yet. Basically, you just broke over one of the first resistance line over here. And basically, to me, this is really just the start if they can maintain over that level. Right, but I think we have to understand what caused this, stagnation in their stock price, and I think a large bulk of it is down to the interest rates that are being set by the Central Bank of Brazil. That has been a significant factor in affecting their operations, affecting their financial performance in 2025. Now, as of August of 2025, I believe they're at 15% or 14.75% because they hiked 50 basis points in May, and then in July, I believe they held rates constant. Because of Donald Trump, which I will address later on. So I think some of the projections for the Brazilian rates indicate that they could stay at this 15% range for the most of 2025, and then gradually declining down to around 10% by 2028, which means over the next 3 years. Now, with cuts unlikely before 2026 due to uncertainties around inflation and things like that. Now, initially, when I looked at this, I was a little bit concerned because, 10% interest rates still seem pretty high. I mean, in Singapore, I'm generally used to around 1.5, even sometimes close to 0.5 interest rates. But generally, in Singapore, generally accepted 1.5 to 2, right? But there have been years where it's lower than that. And I think it's the same in the US. There are certain years where interest rates were negative. But if you look at this chart over here, you can see over the last 10 years, interest rates being around the 8 to 10% range is actually fairly normal. The only time where it went down to 2% was during the pandemic. So I think if you understand it in context of Latin America, 10% interest rate is, more or less in the average ballpark. So because of that, I think the way I look at this, the way I look at NUBank, really is that, this is the same story that we have been through with SoFi before. High interest rates basically scare investors, but if the company can execute and get to the other side of this, then they will do just fine, which I think NUBank has proven time and time again that they are able to do so. You see, I think apart from this, I think they also experience a lot of volatility due to the conflicts between US and Brazil. I think this happened sometime in July or August. So basically, Donald Trump threatened to impose, I think, 50% tariffs on Brazil due to some disagreement he has with the Brazilian president. I'm not too, I didn't read too much into this, but basically, he was unhappy with how PIX is actually unfairly, ostracizing American payment companies and things like that. So, sometimes you listen to the things that he say, you can't help but think it's ridiculous. Like, to a certain extent, yes, we want to let capitalism happen, but at the same time, I think countries also want to protect their own self-interest. You can't just let another company come in and run your entire country's payment system and things like that. These are things that I can understand where he's coming from, but I think it might be a little bit too extreme. So anyway, but I think by and large, so far what he has done in the US, I think people in the US are really split down the middle. And I'm not from the US anyway, so I don't really see the impacts of it, at least to me. Like, he has implemented tariffs on Singapore, but that's only if US buys Singapore stuff. When we buy stuff from the US, it's still the same. So to me, it doesn't really affect us. And I think when the US launched this investigation into PIX, claiming that it discriminates against American payments company, and with NUBank integrating it into part of their ecosystem, which I was talking about earlier, then I think because of that, people start to have uncertainty over whether or not there's going to be a slowdown in NUBank's revenue, and whether or not the impact of the tariffs will cause the Brazilian economy to slow down even further, right? And I think at the end of the day, because of all these uncertainties, because of all these fears, NUBank's price basically has traded within the range for much of this year. So, like I was mentioning earlier, in response to this, I mean, of course, Brazil has responded by defending their own payment system, and then they basically kept rates constant to basically protect themselves against the potential tariffs, right? Because if tariffs are coming and they are likely going to slow down the Brazilian economy, then you do not want to raise rates so to such an extreme level that you yourself start to slow down the economy as well. And then if Donald Trump imposes his 50% tariffs, then Brazil may really end up into a recession. And I think that's the fear around NUBank as well. It's more of a macro fear than anything to do with the business. But as you remember in our checklist, we like to invest in businesses that can actually survive all of these downturns in the economy. So to me, this is really nothing to be worried about. I think if you trust the management and if you hear David Velez talk, you know that he is someone that really understands the market that NUBank is operating in. So to me personally, I'm not too worried about it, because I think apart from looking at some of these macro data, when you are investing, you are basically just giving money to the CEO and trusting him to allocate the capital to grow that particular business. And I think David Velez and the team in NUBank has proven time and time again over the last 10 years or so that they have they're really good capital allocators and they really know what they're doing. And so, I think from here, moving on, we really want to focus on what NUBank has announced during their earnings. And so if you take a look over here, customers have grown at a very impressive rate. They have grown customers at a 31% CAGR between 2021 and 2025, right? And you imagine that they are keeping up this 31% CAGR, although their customer counts are in the tens and even now hundreds of millions. Now, it's not just customers for the sake of customers. You can also see the light purple dotted line in the middle. This basically represents the percentage of customers that are active on their platform. And this has increased from 72% back in 2021 to 83% in the last 2 years. So you can see that people are just not just downloading the app one time and using it one time, but they're actually using it on a fairly consistent basis. Revenues is up 85% over the last 4 years as well, from $336 million to $3.66 billion, right? Gross profit is up 78% CAGR. You can see the gross profit, if I'm not wrong, is around the 40% range, which is, I guess, slightly lower. If you consider things like SoFi's lending is over nearly 60% contribution profit, similar to financial services over 50%. In fact, SoFi's only business segment that is less than 50% is their tech platform, right? So if you consider that, then you start to see, okay, maybe their gross profit margin is slightly lower than some of their competitors, but you have to understand they are in Brazil. The demographics over there is different, and at the same time they are using a slightly different strategy. Now SoFi is going more towards the very explicit kind of marketing, like in your face, like SoFi Stadium. We pay a certain X amount of money to own the stadium, to own the naming rights to the stadium. When people come, they will start to know. Whereas in NUBank, they have different segments of their business, like new sell, new travel, and things like that. So I think because they have so many different moving parts, it is a bit harder to get the same kind of margin levels. So then at the same time, you can see net income has grown substantially over the last couple of years. They have turned profitable since 2023 and continued to grow at pace, right? And I think what really drives that, while apart from talking about their $7 customer acquisition cost, is their monthly average revenue per active customer. So they're not just counting customers that are downloading the app and then leaving it there on the phone. They're counting the monthly average revenue per active customer. So you can see this number has been fairly consistent in $11.40 back in Q1 of 2024 to $12.20. Now, I just want you to just remember this graph, because later I'm going to show you something else that shows you how impressive this is, right? But at the same time, the next graph, this is the cost to serve each active customer. So you pay 80 cents to serve a customer, 90 cents to serve a customer, and yet this customer generates you, $12.20. Yes, they focus on growth, especially in Mexico and Colombia, and they're not focusing on the margins right now. This is definitely true, which is why you might see certain margin compressions, and because they are really in growth mode over there. I think they just got approval for the banking license in Mexico. I think this was back in May or June. So you can really see that they're growing over there as well. And because of that, it could be why they are sacrificing margin, because it's the same concept as SoFi. When you get newer customers on your platform, they do not spend as much. And I'm going to show you that exactly in the next slide. So you can see over here, this is the monthly average revenue per active customer by cohorts. So in year one, right, while spending 80 cents to service the customer, right, the customer basically spends around 80 cents per month. So you more or less, whatever you're spending on the customer, they're also spending on your account. So you basically break even, so to speak, on that customer in year one. But by year 2 or by the end of year 1, 12 months after they have been on your account, right? NUBank has basically shown us that, a customer that has been with us for at least 1 year, basically 6x in terms of the amount of revenue they generate for the business in just 1 year. And you can see the final graph over the final bar over here after 96 months. After 96 months, that's like 8 years. After 8 years, the cohort end up spending around $27.30 per month, while the cost to serve the customer is 80 cents. And that is why you can see their net income increasing at such a fast pace, and why they are able to maintain such a strong gross profit despite having so many businesses out there, which is why I say despite their lower gross profit margin compared to companies like SoFi and things like that, I don't really penalize them for it, because you have to understand the business model, and like what Mr. Aston has told us as well, that because they are focusing on growing in other countries right now, like Mexico and Colombia, that also causes their margin to be slightly compressed. So you can see it's not just revenues. This was all driven by their total loan portfolio, which is growing, which is very healthy. Deposits are growing as well over the last 6 quarters, $24 billion just 1 year ago, and today is $36.6 billion. And at the same time, you can see their net interest margin, risk-adjusted net interest margin. Okay, people were a little bit worried because it was coming down, and then finally we are getting an inflection point. Now, this is the first inflection point that we have seen, and we want to know that this will continue over the next couple of quarters as well. But you can see this is a company that is very well capitalized. This is a company that is not in danger of being bankrupt, even if the Brazilian economy does go into recession because of all these inflationary fears, because of all these fears of tariffs and things like that. You can see capital ratios, minimum is around 10.5%, and currently they are around 32%. Similar, and for liquidity ratio, they should have around 100%, and right now they're around 69%, right? And the non-performing loans is around 3.8%. There's a slight tick up, but like I said, I think this is where the framework, and I know I can't adjust the framework to account for every single scenario, and we just have to apply some nuance to this. But you see, generally, when we are talking about a developed nation, a non-performing loan percentage of over 2% is actually not fantastic. So 3.8%, it definitely sounds bad, but I think if you take a look at the range that they have operated in over the last couple of years, I think you can see that is the average, at least for Brazil, and they have been making it work over the years, right? So whatever fears that we may have, I mean, over the last 12 years, they have clearly been making this work. They have a way to do their underwriting that works for the Brazilian population. And so to me, I don't think this is something to be worried about. Okay, so let me get into the valuation. Let me pull up my spreadsheet. Here's my spreadsheet. It's over here. All right, let me make myself smaller. Okay, so basically, on the first page, we are tracking their business metrics. These are the numbers for the total members as well as total active members at the bottom over here. So you can see, you can see that in Q2 of 2025, you know what? Let me try this. If I put it like that, is the screen too small? Are you guys able to see? Because I feel like I keep blocking certain numbers when I'm looking at the file. If you're unable to see, please let me know in the comments, right? Otherwise, I'll just continue. So total members on NUBank's platform, 123 million members, and out of which around 83%, which is 102.1 million members, are active on the platform, right? So you can see people are really using their product. Average revenue reported over here. Okay, Mr. Aston can see, Shamil can see, that's fantastic, right? So if it's too small at any point, just let me know, right? Because I'm looking at my actual file, so sometimes I may not notice. Cost to serve, I've actually plotted it out. So you can actually see this 80 cents has been consistent over the last couple of years, all the way from Q1 of 2021. They have been ranging between 70 to 90 cents of cost to serve every single quarter. So I think to me, this is highly, highly impressive. And this is why it shows that their business is very, very scalable. And the only question that I have is whether or not these unit economics can be replicated in a more developed nation, right? Okay, and then you can also see their deposits over here. Now, what I want to bring your attention to are these graphs over here. Okay, so I have basically chosen to, and I think the good thing with all these metrics is that you can create your own graphs to draw different relationships from different metrics. First graph that you're seeing is basically showing you the total member count and then how fast their new members are being added. So you can see on average, they have added between 4 to 6 million new members every single quarter consistently for the last 4 years. So I don't think there's anything to be complaining over there. And this orange line, this second graph, you can see basically the blue bars represent the total number of members on their platform. But the orange line that you are seeing over here represents the percentage of active members. And that has basically risen from 70% all the way up to over 80%. Currently, we are around 83%. Was it 83? I think 83%. And this 83%, they are able to maintain this number while growing their member count. And I think that is highly impressive. I think you would think that, perhaps sometimes as companies get more and more members onto the platform, they churn off members as well. But this actually shows you that the so-called churn rate is actually getting lesser and lesser because you're adding more members, but still being able to maintain the percentage of active members on the platform. And so this graph over here is really one of my favorite graphs to understand NUBank. You can actually see if I zoom in a little bit. This is the average revenue per NUBank customer versus the cost to serve. So you can see that in Q1 2021, this blue line is around slightly under $4, while the cost to serve is, well, like I said, between 70 to 80 cents. And over the last 4 years, this blue line has grown exponentially, while the cost to serve has basically remained the same. So you can see that's how they have gotten more and more profitable over the last 4 years. So I think this is a very, very well-run business in general. I think in this page, I think there's nothing much for us to see over here. I've just basically used Fiscal AI and keyed in all the different revenue numbers, gross profit, net income. And I don't think there's anything too far out of the ordinary over here. Like I said, gross profit, I'm using SoFi as a benchmark, which is why I think that they're low. I'm not saying that 40% gross margin is bad by any stretch of the imagination. And if you consider the demographics that they're in, if you consider that they're focusing on growth, if you consider the fact that they have so many other aspects of their business, I think 40% is very healthy, all things considered. And then similarly, you can see net income is growing very, very healthily as well. So I really have no problems about the business. Now, the only thing over here is that if anybody tells you to use a DCF for a bank, they are highly, highly mistaken. You cannot do that, which is why I think this is the first time you guys are seeing this page. Now, what this is the valuation page where if we are talking about a financial services company, we don't use discounted cash flow. We end up having to use things like your price to earnings multiples, price to sales multiples, EV to EBITDA, things like that, right? As well as the PEG ratio. So basically over here, what you have is NUBank's revenue over the last couple of years. And then basically in this most latest quarter, I believe, let me just share my screen on Fiscal AI. Okay, I think what you are seeing over here, let me just pull it up. Is it over here? Sorry, give me a second. Then let me remove the... So what you're seeing over here, like I was saying, is really the growth of NUBank's revenue as well as their net income. And basically what we are going to be doing is to use these numbers to project out their earnings per share. Now, if I were to compare them with their peers, let's go to ratios and then let's take a look. Sorry, not ratios. I believe it's industry, right? I'm still not used to this. I literally just subscribed to their platform recently because before that I was actually using Seeking Alpha. Okay, so right now, let's look at PE ratio or PEG ratio as well. So you can see NUBank's PEG ratio is only 0.4 and their forward PE is 21 times. And I think to me, this actually shows how undervalued this company is right now. Now, I just want to warn you that my PEG ratio segment in that valuation sheet isn't fully built out. So you just ignore the PEG ratio first for now. But basically what it does over here is that once you fill in all these earnings, you can actually see the trailing 12 months. On the trailing 12 months basis, I believe NUBank's earnings is around $5.8 billion, if I'm not mistaken. If I use last 12 months, revenue, total revenue is around $5.8 billion, right? So they expect around a 20% year-over-year growth, and that is what I'm be using in my valuation as well. So let's go back to NUBank's valuation. Okay, so like I said, we are going to use 20% as our estimation for their 2025 revenue because that's what they showed us over there. And then let's say this growth slowly starts to re-accelerate in 2026, 2027 as rate starts to come down, right? And then basically, I'm assuming that they will only slow down towards, I would say, in a sense, slow down towards the end of the decade. Now, actually, when I was looking at this, I'm wondering whether or not this is way too conservative for the very simple reason. Historically, they have never actually grown at 20-30%. Because when I look at because when I look at their numbers, previously they were growing at 100% year over year. And then last year they did 48%. And this year was the first year that they are doing around 20%. So if I'm being very honest, what I actually feel more comfortable with is to accelerate this back to the 30% range and then to see them go into the decade coming into maybe high 20s, low 30% range. Now, the reason for this, and I'm not just putting in these numbers for the sake of numbers, they achieved this growth just by reaching 60% of the Brazilian population. You have to consider the fact that now they're going into Mexico. Now they're going to Colombia. There have been rumors of them buying NUBank, I believe, in Argentina, which they left in 2019. And now they seem to be going back to compete against Mercado Pago. And I think with all of this put together, with the rates coming down, like the analyst was mentioning earlier on, to the average range in around 2028, then I don't think it's too far-fetched to say that they get back to, mid to low 30% year-over-year growth. Because historically, you just look at these numbers over here. Right, I don't really have the numbers from 2019. So over here, 87% growth, 116%, 101%, 48%. And then this year, they're expecting around 20%. So I would think that this is actually a pretty decent estimate. Now, from here, net income 34%, and I think this basically stays more or less the same all the way through. And then after that, shares outstanding, I basically assume very little dilution because that's what they have shown over the last 2 years. Previously, there was more dilution, but after that, dilution has been pretty much kept in check. And from here, you get the EPS throughout the next couple of years. So I don't know why right now they tell me that the PE ratio is 30. Is the PE ratio really 30 now? Okay, but anyway, I'll fix the price to earnings growth segment, and then I'll show it to you perhaps tomorrow when I'm doing Oscar. But so basically, I can choose whatever year I want. Let's say I want 2030, and then the PE ratio, that the forward PE ratio perhaps is 30, and your earnings per share is $1.73, which means that the price target based on the PE ratio in 2030 is $52.01. Now, in terms of the price to sales ratio, right now I'm using 7 times price to sales. Is that fair? Let me take a look. All right. Currently, they are trading at around 11 times. So I think they're trading at around 11 times price to sales. So I think by the time we get to 2030, this is actually, would it drop by around 30%? Yeah, I think 7-8 times, there's not much difference. It's around there. I think 7 to 8 times price to sales, they will be a much bigger company by then. And I think from now to 2030, basically, there seems to be at least, at the very least, nearly a triple from here, or nearly a 3x from here, right? 200%, nearly 200% profit. It depends on your assumption for the price to sales. If you put this to 8, I think you're getting there. Yeah, nearly 200%. But for me, how I end up getting this number, your PE ratio, average over here, plus your price to sales ratio, and then from here you take a 10% margin of safety, and then that's how you get $39.47. Now, the reason why I have only chosen to give a 10% margin of safety, honestly, is because of the credit that I'm giving to the management. I think if this was some other management, I might be inclined to give a larger margin of safety because the business is in Latin America and it's not a market that I claim to have a lot of knowledge about. But because of the management, because of how well the management has executed in the past, I think a 10% margin of safety feels quite safe to me. And with that, that will get you around 175% return today minimally. And then if you look at it on a CAGR, that's around 27% CAGR from where we are today every single year for until 2030. And I think right now, because they are still in growth mode, it's actually quite hard to project out their margins, which is why I do believe that we can actually get higher than this if they really at least fully scale out their Mexico, Colombia, and Brazil operations. And then from there on, I think these 3 will act as a very solid foundation, and then they can just add on different countries. And because they already have this certain model that works, they know how to approach a certain demographic of people. They can basically more or less copy and paste the same system into various parts of the world. Only now they offer loans to legal entities, and this synergizes with insurance in future and new banking products. Yes, definitely. Oh, I think for banks, it's a bit harder to take free cash flow into the equation because of the movement of cash in and out of their business as a whole. So because of that, we don't really use free cash flow for banks. Yeah, so free cash flow, we usually use it for other companies, usually tech companies and things like that we use free cash flow. But for banks, because it doesn't mean that the cash going out means I'm actually spending the money necessarily, and because of that, it's a bit harder to use free cash flow for banks. Yeah, let's go to cover the framework that we have for NUBank and see where we end up with. Okay. Now let me bring this up. This is the checklist that we have, that we are familiar with. Again, I'm going to put myself to the side here so I won't block anything. Let me just zoom into the checklist so that you can see. Okay, so this was end phase. Have I copied end phase? Yes, I have. Okay, so let's take NUBank through this checklist over here. Oops, I believe this needs to be the Yeah. Yeah. Okay, let's do this. NUBank's price. Right. So total addressable market, definitely full marks for total addressable market. Serviceable addressable market, also full marks, because it's basically whatever country that they go into and the entire adult population, right? And they have shown that with Brazil, they are just getting started. They have already standardized, or they already have a framework that they know works in that region. They are applying it to Mexico, they're applying it to Colombia, and now possibly even Argentina, right? CAGR, I don't think, I think if you look at banking as a whole, then the CAGR may be slower than 10%. But if you're talking about reaching out to the unbanked population, that's totally different. And that is how I'm looking at this over here, which is why I'm actually giving them full marks for this segment. Although I am well aware that the banking CAGR, I don't think is above 10%. Right, because you have to understand they are not just a bank. There's basically a whole ecosystem that they're financial services that they're working within, and they're going after the unbanked population. And that particular market, the unbanked population, the CAGR over there is definitely more than 10%. So is there switching cost? Is there switching cost? Will you consider switching cost for banks? I think the only switching cost you have is that if you already have taken out a loan or you're already having your mortgage with a certain bank, then it's going to be very hard to switch. I think to a certain extent there is some sort of switching cost over there. Network effects, more people using it. Yep. Okay, low cost at network effects. I think the more people, you can actually say that, with more people onto the platform, they are able to do better underwriting, right? So to me, I think it works, because I think for me, one of the main concerns I had previously when I first started to look into NUBank is that they're in a Latin American country. I don't know when I take a look at the non-performing loan score over 3%, that kind of freaked me out a little bit. But I think what they have proven over the years is that they have an underwriting style or a way of doing the underwriting that works even with their non-performing loans at 3%, right? Because they are so well capitalized. And so this is something that I feel like I need to give them credit for. And it's because of the sheer number of people that they have underwritten for and the sheer number of people that are on their platform. Do they have low cost advantage? I would have to say they definitely have a low cost advantage. If you just take a look at the cost it takes them to serve a single customer, if that is not low advantage, I don't know what is, right? I'm actually inclined to say that this is actually fully built out and strengthened during volatility, because you can actually see even during fears about tariffs, even fears about inflation, even with rising interest rates, the low cost advantage that they have is still the same, 70 cents, 80 cents, 90 cents, nothing much has changed. Economies of scale, yes, of course, they do have economies of scale, because the more people that they have on their platform, they have more data on the consumer, and they are better able to provide products that can better serve the consumer. Regulatory framework, I think this is a mode that is strengthening and clear, but not insurmountable, in the sense that when they go into every new country, they want to apply for a banking license, and they get the banking license, like in Mexico, for another company to come in and compete is actually going to be hard, right? Because they're not necessarily going to get that banking license that NUBank already has. Intangible assets like brand, I think the fact that word of mouth is the large majority of the way that they that they actually gain their customers. I would say that this is a strength. Now I was very tempted when I was thinking about it to say that it is fully built, but I would say that it is fully built in Brazil. I think I want to see this same trend happen in Mexico, in Colombia, in a couple other countries before I give them full marks for this section. Any thoughts on why Berkshire Hathaway exited from NUBank? Honestly, I think they were in from a very, very early stage, if I'm not mistaken. And so, maybe a double or triple in 5 years might not be as exciting for them. But I think at the same time, Yeah, I think he's at that point in time when he sold, I think he was converting his cash reserve to buy, yeah, during a market downturn. So I have no real clue why. We only know that he has sold, but we don't actually know why. And yeah, it's really anyone's guess. Revenue growth definitely faster than TAM. Okay, right now they are high growth. When they go back to hyper growth, then I will give them full marks for this, right? Optionality, definitely they have no customer concentration, moderate gross margins with strong cost control. I have no problems over here. Now, like I showed you previously, when this industry over here is banking services, you can see debt management automatically goes to zero. I've put certain changes to be made over here. So at the end of these 10 days, I will relook at how I go through this framework. But for now, because I want to keep everything consistent, I'm going to use the same framework all the way through, despite some of the changes that I want to make to the framework. Okay, CET1, I mean, they don't really have a CET1. The CET1 ratio above 12, I say above 12%. The regulatory minimum is 10.5%, and they're currently at 32%. So definitely no problems. Now, the non-performing loans they are unfortunately more than 2%. So I don't really have a framework to decide Latin America, non-Latin America, and I don't even have the expertise to know whether or not a 3.8% in Latin America might be equivalent to a 1.1% in the US. I have no idea. So for that, I'm just going to be a bit more conservative, take some points off there just because it's above 2%, right? If I'm using the CET1 ratio across the board, then I think this standard for the non-performing loans should be used across the board as well. And then the net interest margin, okay, 9.8%. There's no FDIC over there, right? So what is that? Let me see if I can find the average net margin banks in Brazil. Okay, the average net interest margin for banks in Brazil was 4.42%. Okay, and the St. Louis Fed also shows us the same number. Yeah, okay. So, I mean, over the last couple of years, let me just show you. Over the last couple of years, they haven't even gone above 9%. So, I don't think... yeah. So, basically, I think that NUBank is pretty much above... Let me just share this with you. Yeah, so if you take a look here, from 2002, they were around 6%, and then they have basically hovered around between 2 and 7% ish over the last 20 years. So I think coming in at 9.2% really isn't too bad for them. Okay. So for that, yeah, I'm going to give them 2 points for here. That they are... Oh, sorry. That's just a notification that SoFi hit $26 again. Visionary, founder-led, definitely yes. Buybacks, they do have... no, sorry, they don't do buybacks, but they have high insider ownership, so 0.5. Reducing debt, I mean, there's no risk over there. Exit unprofitable segments. I don't think they... Low to no risk, diversify. No unnecessary M&A. Core business suffers in downturns. I think it survives downturns. 5 to 10 years, one bad market cycle. So overall, you can see, so far, NUBank is actually one of our highest scores to date. 30.3 out of 40. Fantastic. I believe SoFi is 32, 33, something like that. So this is... And I think you imagine, I think if I were to find out about, the non-performing loans over here and they get a couple of points from here, yeah, even 0.5 or 1, then, they are going to be basically more or less, you can say the same quality of company as SoFi. But this basically, the verdict over here is that NUBank is a high quality company, and I think NUBank really is. I think you can trust the management in terms of what they say, because they have delivered everything that they have said along the way. David Velez is very confident that he has been able to manage through so many different macro conditions throughout all the different presidencies in Brazil, that he can continue to take the company forward. And I think for me, like I said, the main thing for me is that because I wouldn't claim to be super familiar with the Latin American market, but what I do trust is when you listen to David Velez speak, you can really tell that he is someone that can visualize how the future he wants to look like, and he can actually get people to push in that direction to create that future that he actually sees in his head. And so with that, I do think that David Velez and the team in NUBank are fantastic capital allocators. I think this is a investment that if you have it, I think you should feel safe over the next couple of years. I think where they are right now, especially with the high rate environment, is exactly where SoFi were maybe 12 to 18 months ago, right? And so I think as they come out from the other side of that, they're going to see similar growth. However, I think the only caveat over here is that NUBank is actually growing at a much faster pace than SoFi because of their unit economics based on where they are. And actually, if you see the reason for the most recent spike in their share price is due to their results in their earnings. And I think if they can continue putting up these numbers, you don't even need to wait for the interest rates to come down for their share price to continue to appreciate from here. And so with that, I think if I'm open for any questions. If not, we will call it a day. And then I'll see you tomorrow, where we'll be talking about Oscar Health. Now, tomorrow's live stream might be a little bit longer, because Oscar Health is one of those positions where I have decided to invest and investigate. And yeah, I'm basically taking you through my whole thought process tomorrow, where I look into the US healthcare system, because it's actually quite different from what we have in Singapore. And I think the difference between this US healthcare system and Singapore's healthcare system is where I see the gap for Oscar to actually penetrate the market. And that is why I eventually decided to take up a position in Oscar Health. I think apart from that, thanks, Shamir. Yeah, you don't know an Oscar, but I've been telling your friends about it. Yeah, I mean, I heard great things about them. I have told my friends and my uncle in the US to take a look at them, perhaps try out their products, because the open enrollment period, I believe, is from 1st November to 15th of January. And if any one of them switches over to Oscar, then perhaps I'll get to see their interface and how it looks like and things like that. Because I think the enjoyable part about investing is to actually feel and see and use the product that you are investing in. And I think for me that is an important aspect of investing as well. Right. So if there's nothing else, I will see you tomorrow, and basically have a good night.